of for the months starting 1st September 2024, the business produces and sells a single product branded 𝐂𝐲, whose details are provided below. So we are given the direct material, which is shillings 5 per unit, the direct labor, which is 10 shillings per unit, the variable overhead 6 shillings per unit, the selling price is 40 shillings. So we are given additional information, projected sales and the production units. Information is provided as follows. So in our case here, we are given the projected sales in units from the month of July all the way to the month of December, all the way to the month of December. These are the units which the company projects it will be able to sell. And then you're given the production. So these are the units which are the company projects it will be able to produce. And then from there, we are given the variable overheads. And the variable overheads are paid in the month that they are incurred. And then you're told the fixed overheads are budgeted at shilling 700,000 per month, which include the depreciation. Remember, we say that depreciation, this one is an non-cash item, So when preparing the cash budget, we don't consider the non-cash item. In other terms, we don't consider those particular items of incomes or expenses which do not give rise to a cash inflow or cash outflow. So in our case, when considering these fixed overheads, we will have to exclude the depreciation simply because it's an non-cash items. And then number 4, we are told wages are paid 75% during the month in which they are incurred or basically earned, that is, and 25% in the following month. Number 5, material costs are paid 2 months in arrears. So in other terms, the material will be paid after 2 months, in arrears. Number 6, a tax liability of 1.4 million to be settled in the month of October. 7, a new van will be purchased in the month of September 2024 for shillings 2 million. And then you're told the current motor vehicle shall be sold in the month of November 2024, and it is expected to fetch shillings 300,000 from a prospective buyer. And then number 8, we are told the cash balances at the month of August 2024 is expected to be 1 million. And specifically, we are told that this is the cash balance at the end of the month of August. Automatically, this cash balance at the end of the month of August shall be the opening balance in the month of what? In the month of September. In the month of September there. And then you're told the business makes a monthly cash sales of 50% of the total sales in a specific month, while the remainder is on the credit, which is settled 1 month after the sales. So what are we required to do? We are required to prepare the cash budget for the month commencing 1st September 2024 to 31st of December 2024. In other terms, you're required to prepare the cash budget for how many months? The month of September, the month of October, November, and December. So that is a cash budget for how many months? For 4 months. For 4 what? Months. So maybe in this case, I don't know whether we have some few workings we need to do here before even we can proceed to prepare our cash budget. Let's see whether we see whether we have some few workings which we need to do before we can proceed to prepare the cash budget. But remember, in this case, we said that the first thing you should even be able to remember is the format of the cash budget. Remember, you said when preparing the cash budget, always we have the details column, then basically columns equal to the number of months. If you can remember the question which we did in class, we prepared the cash budget basically for 12 months from January all the way to December. But in this case, we're required to prepare cash budget just for 4 months. The month of September, October, November, and December. So we need to have basically how many columns? 5. The total, the details column, and basically columns equal to the number of months. And then from there, we start by recording the opening cash balance. We record the cash receipt or the cash inflows. And then after that, we record the cash what? The cash outflows. So maybe we can see which expenses or maybe which workings we can compute. Now here, we are told this company, which is called 𝐕𝐍, basically produces and sell a single product, which is called a product K. And we are given the details. So these are basically the production costs. So for the company to be able to produce that product, the company incur direct material cost, direct labor, variable overheads, and the selling price. Maybe in this case, we can have some few workings here. We can have some few workings even before we proceed to prepare what is required. Maybe we can start by computing this particular variable cost, because in this case, I think in point 2, we are told variable overheads are paid in the month they are incurred. Which are the variable costs? The variable costs are basically this cost which we have here, the direct material, direct labor, and the variable overhead. So I think what we need to do is we compute the variable overheads. Let's have that as the first working here. As the first working here, the variable overheads. Or I don't know whether we, instead of having that here, can we have that working within our cash budget? Yes, let's do that. Instead of having separate working, because remember, he said this particular working, for example, in an examination setup, will just be consuming a lot of your time, but basically by the end of the day, they are not marked.